Hello my friends, here we are again, doing an analysis on gold, reviewing what has happened and what's gonna happen probably in the coming week. Okay, first of all, since it's going to be the end of the year of 2025, I have to do an analysis from top down because it's really important how we close the year. Alright, 3 monthly is an important one because it can actually change many things. Okay, we will understand what I'm saying pretty soon. Okay, first of all, looking at the 3 monthly chart, as you can see, the market is going up and up and up. 3 monthly actually has gone weak with this candle because it just shadowed to the is going to shadow to the upside. Of course, we haven't yet closed the monthly chart, so we will have to wait for that close too, so be careful about that. But generally speaking, I assume the market does have the potential to close below the 4,000. If only the market closes below the 4,000, we can expect the next 3 months, because 3 monthly is a cycle, we can expect the next 3 months to be bearish. Alright, at least for some time, maybe the first 2 months and then the last month's gone up. Okay, we have to wait and see. Okay, this is it for the 3 monthly. Now let's take a look at the monthly chart. The monthly chart is interesting because look at this. The market has been sideways for 3 months, almost 3 months. And even the last month, it couldn't actually break above these shadows, but then it gone up. And now, the last month we shadowed to the upside, we came back above, but couldn't create that high or even touch that high. So this means that the upside move is a little bit weaker than we thought. Okay, so and but doesn't mean that okay now we are gonna fall, or we have to wait and see if the market gives us the signal. Yes, we might actually fall, but for now we created a higher low in accordance to the last month, and we created a lower high in accordance to the last month. So the market is definitely not making a new high nor creating a new low. But this signal mostly is called the inside candle. As you can see, this candle with its shadows is completely inside this one. So we might go sideways for the next month, but this signal mostly indicates that we are going to go bearish. But we don't expect that, and we shouldn't actually make assumptions so soon. I'm just telling you about the formation of the candle. And if that really happens, we can expect the market to retrace a little bit to the here. Okay, here is a important level because the market was just pressured here, as you can see. Now let's go to weekly and see. Okay, from the weekly point of view, the market completely cancels out this candle, the last candle that went up, and now we are kind of a doji candle. We can call this a doji. So we have to wait and see what the market decides. I told you before the last week that the market is creating a little bit of a bearish insight in our minds, but we have to wait and see. But generally speaking, weekly is bullish. Okay, from the big picture, okay, if I zoom out the chart, it's completely showing bullish movement and a structure. Okay, and I can assure you that because let's look at the levels I created here. First of all, this level we created above that, and now this level which the market actually made beautiful rejection of it. So we can go bullish as well, because look at this. The market came to retest the 4,000, came back up. It means that it means that the market is kind of bullish, but uh, since it was a, you know, red candle, as you might say, we can expect the market to go lower a little bit, of course. So we have to wait and see what the market decides. So we are bullish, definitely, from the big picture. And the small picture, this candle is kind of indicating maybe bearish retracement and then up, or maybe bullish move and then goes down. So we need retracement to one of the other sides. And looking at the EMAs, okay, we can definitely see the market is bullish completely. It didn't even actually touch that higher EMA, interestingly. Okay, now let's go to the daily. Maybe the daily can help us. The daily, as expected from the last week, I told you that the market will go sideways, and it did. And I told you specifically that if the market touches the lower levels, then you should take a buy trade. If the market touches the higher level, you should take a sell trade. Alright, so, and it did happen. In the daily perspective, definitely the market is bullish. Not gonna argue about that. You can see we have this 4-hour box holding perfectly, but you have to be careful. When we have so many touch like this here on a level, it's getting that level weaker and weaker. Alright, so let's look at the volume. If volume is an indication, as you can see, these 2 days, alright, had a huge volume on it, and it was a red volume. Alright, so we have to be careful. And but of course, mostly the shadows are to the bottom, so we can kind of think that it's going to go high. Okay, now what we can see in the swing of this, okay, you can see that the market goes lower, goes higher, created a, look at this, a beautiful higher low. Alright, so if I put maybe like that, there you go. So this is definitely a higher low, and the market, even though created this higher low, couldn't actually break this low. Alright, so this low is very important for the market. If the market loses this, the market actually might change its side. So, generally speaking, we are bullish from the big picture, but the swings tell us different. But since we stop right here, the market can actually make this a higher low. Or not. We are just consolidating. As we can see in the monthly. Do you remember the monthly? I told you that this candle was inside another. So here you go. Here you can see definitely what I'm talking about. The market goes like this, goes up, goes down, and now we're trapped. Okay? So we are definitely trapped. So the monthly indication helped us, okay, know that we are consolidating, nothing more. So which actually level breaks is really important, because it can define what our next move would be. So you have to look out for that too. I'm gonna go to the 4-hour. Oh, first of all, let's go to the EMAs. The EMAs definitely show sideways, because look at this. The market goes below it, once again below it, goes a little high above the lower EMA, goes above both of them, below both of them. Alright, so it's definitely indicating bullish. So don't get help from the EMA unless you think it can help you. For example, And when it goes below this, alright, it actually had a little bearish momentum build up, but it wasn't much, so it cannot help you really when we are consolidating. The EMA's um, disadvantage is that when you are consolidating, it cannot help you. But when you are actually having, when you have an actually important move, it can really help you decide where the market is going. So I'm gonna turn off them. Let's go to the 4 hour. 4 hour. After we break above this, we created that high, get back down, created a higher low. In accordance with that, let me just mark that with the trend line. Beautiful, right? It was really beautiful. That's why you should always, always do your analysis daily at the end of the day, at the start of the day, okay? Because look at this. I hadn't seen this myself. I told you that if the market goes down, do you remember the last day of the week? The last week, I mean. Okay, if the market goes down, you can go buy or you can go long. Alright? Look at this. It nearly touched that, and now we were bullish. The market came back, touched this, and goes higher. Very beautiful. Very beautiful. And you could make a great trade even when the market is consolidating. So, this is a great move. So we are actually a little bit bullish, but we have to be careful because once the market created that high right there, let's look at that. It created this low, but couldn't create a new high, which we would call a higher high. So what we should have expected for the market is to go above, maybe touch that level, and then come back down to retest these levels, alright? Or maybe this level. But it didn't do that. The reason is being that the market is consolidating once again. Okay. So be careful about these movements. These highs and lows are indicating consolidation. And we are nearing the end of the year, so it makes sense for the market to make such moves. We can expect the market to consolidate for a little while, but its time will end. Alright? Its time will end eventually. So let's see what the market will do and decide to do in this week. Since it's the last week of the year, we can not expect much from the market. But if we have to, we can wait and see which box will be broken. The trend line, the uptrend, or this box. If this box breaks, okay, we are going to go higher. If this uptrend breaks, then we can expect the market to go lower. So two scenarios there. Because we are consolidating, I cannot say much, but we know that the market is more to the bullish side. It's a fact because the market is definitely bullish from the big picture, but we have to make we shouldn't actually make assumptions just from this. Okay, we have to be careful. And looking at the EMA once again cannot help you in the 4 hour. Why is that? Because the market is sideways. Alright, so don't make assumptions based on EMA when the market is consolidating. EMAs cannot help you when the market is consolidating. That's the disadvantage. This is the second or third time I'm telling you this because I have experienced it way more than you. And I can tell you it's really bad. So this wraps it up for the gold. We have to wait and see. But if you want to trade, you can trade short movements. I.e., for example, from here to here, here to here. Okay, so very short trades. You have to actually be careful about the levels. So take the levels seriously. And thank you, everyone, and I hope you enjoyed it.